In this video, we're going to talk about Palantir Technologies, trading under the ticker symbol PLTR. We're going to cover the price action over the past few days, the company itself, and the recommendations regarding buying, holding, or selling the shares. If you would like to see more stock analysis videos, please like, comment, and subscribe to my channel. But before today's video begins, I'd just like to clarify a few things about the timing when my videos are recorded, uploaded, and how much they react to the latest market updates. So most of my videos are recorded and scheduled the day before and uploaded for the next day. For 5 days out of 7, it's a trading day, so of course by the time the video goes live on my channel, the price would have already evolved from there. If there are significant and very volatile movements during the trading day, obviously they will not appear in the video on that day. But usually, to the extent possible, my analysis will be based on the medium term and not really focused on the intraday movements. The reason why it shouldn't matter that much either way is because most people investing in stocks invest for some kind of reason that takes time to get developed, and that their positions are usually kept for at least a few weeks. With that being said, if there are significant stock price movements that happen afterwards, either they will not affect the overall picture, or if they're significant enough, they will be mentioned in the next video about the stock, with reevaluations of the circumstances as needed. Palantir is a data analytics company founded in 2003 and is based in Denver, Colorado. It develops software platforms and applications to better understand data flow and optimize operations. Palantir has an appeal for the market because it does have a solid reputation built in a relatively long time and has a lot of established relationships with major federal agencies and obtained many long-term contracts as a result. It operates in many sectors including automotive, legal, natural resources, and finance. The platforms it developed are Palantir Gotham and Palantir Foundry. The market cap of Palantir Technologies is currently at $37.97 billion, and the enterprise value is at $44.96 billion. The market cap is the price tag the financial market is willing to evaluate Palantir at, with consideration to its future potentials and current fundamentals. The enterprise value of the company is the net result of the company's assets when all the debts are paid back. Usually the market cap is higher than the EV, but sometimes there may be exceptions because the market may be highly leveraged or under a lot of selling pressure. The quick ratio of Palantir Technologies is 4.13. The current ratio is also 4.13, and the debt over equity is 0.12. The average trading volume of Palantir Technologies has been 39.56 million shares, and the daily volumes recently have been 27.5 million shares, 30.4 million shares, and 28.4 million shares. The one-year beta of Palantir Technologies is 1.05. Its 52-week high is $35.09, and a 52-week low is $17.06. Now, let's also talk about the options market for Palantir Technologies. In terms of volume and open interest, the options market seemed to favor the call side. Generally speaking, the put options mean that the market expects a pullback, and the calls mean that the market expects a move up. The key strike prices where there are the most interest are $19, $20, and $21. Recently, Palantir released its Q3 results, and the results were kind of received in a mitigated manner. On one hand, the revenue has met or even gone beyond the expectations. But the issue is that the growth of the public contracts has stagnated, resulting in a downgrade from some analysts, which in turn resulted in the massive sell-off. There is one significant level that has been affected so far, and this is the $20 level. It has been a key support line for Palantir since the past few months, and right now the stock is beneath it. This may put additional selling pressure on the stock, and we have to assume that the stock may touch $15 or $16 levels over the next couple of weeks as a real possibility. Ultimately, we have to know what exactly we're looking for. If the goal is to make gains trading the short-term fluctuations, I believe that this ship has already sailed. The current market dynamic favors companies not only solid and established, but also with more predictable revenue streams and cash inflows. Of course, Palantir is fairly established at this point and does have a significant amount of contracts with different government agencies, which is always helpful. With that being said, going in Palantir, we also have known that the company is trading at a fairly high multiplying compared to its revenue, and if we were to evaluate the company like other ones, it's kind of hard to do, right? So going in, the assumption should be that Palantir is expected to grow its revenue streams significantly in the years to come, to expand the panel of clients it serves, especially in the private sectors, but also in the public sectors of more states. And this so far is just a projection. On the other hand, we know that a company is closely linked to what I like to call the establishment, so that it does have some deep relationships with even deeper pockets. But Palantir may have to increase its coverage to better monetize those relationships. And this improvement of coverage will come with technology. One other thing about Palantir is that it has an interest to gradually disappear from the public discourse in order to fully benefit from those government relationships. Because obviously, those entities would prefer to not have a limelight constantly on them because of one of their significant contractors. So far, of course, Palantir is still in the limelight, still attracts public attention, and this is something that they would have to address in the years to come, in my opinion. I think that over the next couple of months and years, the main catalysts would be the technological advances Palantir is capable to generate in order to justify its current stock price and for even higher stock prices. I think that over the next couple of months and years, the main catalyst for Palantir would be to develop new technological advances so that it can justify its current and future stock prices. From where things stand now, the company seems to be on the right track to achieve those in the medium and long term. My recommendation is to keep your exposure between 3 to 5% of your portfolio, and to save at least 50% of your allocation for later. Your investment should also take into consideration the market conditions and the surrounding sentiment to determine what kind of asset should be picked, for how much and for how long. First of all, the financial market doesn't reflect the real economy. If the stock market is doing great, it doesn't necessarily mean that companies are hiring people, that salaries and living standards are rising. Sometimes it's the exact opposite that happens, because the stock market is a pool of money where things come in and come out, going to different sectors to be placed. The capital may be used to be invested in a company to improve its efficiency and productivity, but it can also be used to buy up shares and assets in order to make a profit. This phenomenon is called financialization, and it means that the more money is being used for non-productive purposes like merger and acquisitions, fees to financial sectors, buying back equity, and so on, the less there is for the real economy. Another way to put it is that ever since 2008, the Dow Jones has increased significantly. But people don't necessarily see this growth in tangible ways. This is why we gotta be careful with the assumptions that rising stock price means better outlook for the company. Sometimes it doesn't mean anything other than the fact that the asset is getting more expensive to be bought and that their yields is going down as a result. Additionally, some new phenomenons are now palpable, such as the creation of new bubbles, the participation and influence of retail traders in specific situations, and the anticipation of a massive recession or at least pullback. Bubbles have always been created on and off over the past few centuries, but nowadays it's quite interesting to see the speed at which an organic bubble can be created back in 2020. Because almost immediately after the major collapse of the financial market back in early 2020, the market decided to pour a massive amount of capital in the EV sector and anything that's related to it. Stock prices went up the sky, and for a moment, it really felt like any EV stock can be a golden goose. Another way to say this is that any SPAC with an EV company in it will become the next Tesla, right? Even if it didn't last that long, this episode definitely allowed the market participants to park a lot of their money in a sector, leaving it with either a lot of profits or at least avoiding incurring large losses because they left their money in the blue chips or the sectors heavily affected. The involvement of retail traders in companies has also been much more pronounced in recent months, especially in the scenarios of a short squeeze. Companies may have short sellers who believe that the stock will decrease in value. The short squeeze consists of buying the stock price up to force the short sellers to recover their positions, which will then also trigger an even bigger increase of stock price as a result. Of course, I'm not saying that this is always rational. I'm not even saying that those companies always have a convincing narrative. So, for example, if you play video games, ask yourself if you personally bought all your games at GameStop, knowing that you can buy the same games just online in the comfort of your home. But nevertheless, retail traders do have a much more significant influence in the stock price nowadays, for the better or worse. Personally, I think that as long as the volatility is high or gets higher, it'll create more opportunities. The final phenomenon is the anticipation of a recession. Many people have been expecting something of that sort to happen ever since 2008. There were quite a few companies that were supposed to go bankrupt because their debt structure is no longer sustainable or that their business model is bad. But overall, the system was able to hold its ground, especially in the North American market. This is partially because capital around the world often choose to come to the American capital market when things get heated back home. This is especially the case when geopolitical tensions increase around the world. In order to make sure that capital can provide a steady return without being affected too much by the central bank policies and inflations, I think that this phenomenon will increase its pace as time passes by, at least for the next couple of years. This is why we will likely see the blue chips continuing their ascension, even if for the growth stocks, things may be a lot more nuanced. The bottom line in all this is that the environment is getting more uncertain and volatile in a context where asset yields will probably remain quite low, because the real economy cannot be improved with just money. As far as we're concerned, this means that the patience would be a great virtue for all of us, and that there will be plenty of opportunities to eye for better prices. With that being said, always make sure to keep your positions diversified and keep the risk level under check. Speculative positions should play a small part in your overall portfolio. I would say it's better to keep them below 10 to 20% of your total holdings. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.